What if I told you that the frustrating stagnation of XRP's price isn't due to normal market forces, but a deliberate, coordinated effort by some of the biggest financial institutions in the world? That's the explosive claim from renowned financial expert Dr. Jim Willie. In a recent interview with Versan Aljarrah from Black Swan Capitalist, Dr. Willie didn't hold back. He alleged that massive players, specifically naming BlackRock, are actively working to suppress XRP's price, which he believes should already be worth between $7 and $8. His reason? They want to accumulate a boatload of the token at artificially low prices before its true value is unleashed on the market. This theory has been circulating in the XRP community for years, but hearing it from a respected financial expert gives it a new level of credibility. Dr. Willie called BlackRock a disgustingly corrupt equity firm and suggested that these institutions are operating under secret non-disclosure agreements, NDAs, to keep the price down, all while influencing Ripple to maintain the status quo. The goal, according to him, is simple: accumulate cheaply before the inevitable repricing. But, and this is a massive but, let's be critical here, Dr. Willie himself provides no concrete evidence for these claims. They remain in the realm of speculation. This is where we have to balance the intriguing theory with factual reality. Ripple's chief technology officer, David Schwartz, has consistently dismissed these suppression allegations. Last year, he emphasized that XRP's performance is actually comparable to other established cryptocurrencies like Stellar, XLM, and Cardano, ADA. His point was to debunk the persistent community theory that Ripple itself is suppressing the price through its monthly escrow releases and token sales. Therefore, we have a classic conflict: a compelling narrative from an expert versus a lack of hard evidence, and a rebuttal from the source itself. Now, let's look at the recent price action. XRP recently slipped back below the $3 mark, falling from $3.18 on September 13th to a weekly low of $2.96 on September 15th. This dip below a key psychological level is exactly what fuels these suppression theories. However, the data shows that this movement isn't happening in isolation. Over the same period, Bitcoin, BTC, was down 1.05%, and XRP's price retraced 1.43%. This suggests XRP is largely mirroring the broader crypto market's movements, a correlation that pro-crypto lawyer Bill Morgan has also pointed out, noting that XRP often just plays follow the leader with Bitcoin. So, is the price action suspicious, or is it just normal market volatility and correlation? This is where the bigger picture becomes crucial. The first US-listed XRP ETF, the Rex Osprey XRP ETF, XRPR, just launched. While it set a 2025 record for day one trading volume at $37.7 million, it also faced significant outflows totaling $68.63 million over its first 3 days. This mixed signal-strong initial interest followed by selling pressure could easily be interpreted by suppression theorists as institutions manipulating the market to accumulate cheaper tokens. However, Bloomberg Intelligence senior ETF analyst Eric Balcones offered a more straightforward take, calling the launch really solid, and noting that it crushed the average ETF launch, even if it was a far cry from the massive inflow seen with Bitcoin ETFs. Therefore, the real story might be less about a shadowy conspiracy and more about the natural, often messy, process of a new asset class gaining institutional traction. The U.S. Securities and Exchange Commission, SEC, has upcoming deadlines in October for decisions on 7 more XRP spot ETF applications from major issuers like Grayscale, 21 Shares, and Bitwise. Many analysts see a 95% chance of approval. This regulatory milestone, coupled with the growing discussion around Ripple's potential to challenge SWIFT in global payments, represents the fundamental utility that could ultimately determine XRP's long-term value, regardless of short-term price suppression rumors. In the end, Dr. Jim Willie's claims are fascinating and highlight the deep distrust some have towards large financial institutions. They serve as a reminder to always question market dynamics. However, without evidence, they remain a theory. For investors, the focus might be better placed on tangible developments: ETF approvals, Ripple's growing partnership network, and the XRP ledger's utility in the real world of finance. These are the factors that will truly decide if XRP reaches its potential or remains stuck in neutral.